Hello, everyone. Happy Friday. How is everyone doing today? Good morning, Sterling. Thank you for putting in all the option stuff for options expiration today. So you can read in there all of the levels Sterling put in. Good morning, Patrick. Sterling, also thank you for putting in Bullard and Cash and Carry's little stuff on where they see stuff going. Good morning, Heinrich. I'm trying to get through the comments. Say good morning to everybody. Good morning, Jacob. Yeah, that's it with the good mornings. Well, we have a bunch of people in here, but no more good mornings. Good morning to Patrick and Rusty on Rumble. So, what are we looking at today? Well, it's all triple witching / the old quad witching, option expiration. It can generally lead to a shift. That's why I'm really focused on next week. And we have PCE next week on Friday, GDP on Thursday. Now, we're going to get some interesting stuff. Again, we're still in September / headed into October. Hedges are still warranted, even though they haven't been used yet, but that's the point of hedges. Good morning, David. Good morning, Anissa. Good morning, Andrea. Haven't seen you in a while. Thank you for tuning in. So, that's where we sit right now. I'm going to be watching for a potential shift, especially dollar index and yields. Look at the dollar index, what's happened in the last 3 days. Look what's happened. And people are so bearish on the dollar. Funds are so bearish on the dollar. The short dollar was a no-brainer trade. And, I'm not saying you got to be excessively long the dollar yet, but it's having a hard time breaking down. So it's just rig counts today. Looking at we have Apple, Amazon, all your mega caps except for Nvidia are up today slightly. Let's just look at the groups headed into the open. Everything except energy is positive. We still have 2 more cuts priced in for the year. Fear and Greed still in greed mode. Schiller PE trying to get over 40, 39.86. FedEx was okay, cautiously optimistic with their guidance. They gapped up more. They were a beat on earnings, gapped up more, but have dropped back since then. And I did not look at Money Hero. But we're wrapping up any more earnings. We're going to head into next quarter's earnings very soon. So, hit the like, folks. Be nice. Well, thank you, Heinrich. Hello, Charles. Dollar slumping. Maybe not over the last couple days. I mean, it might be a little pulling back a little bit. We could take a quick look at the dollar index. I mean, I wouldn't call that slumping. Dollar is, it's off a little from its highs, but it's had a nice percent B buy, which followed through with the trigger yesterday and following through now. On any rollover, I mean, you can see the buying pressure. You also see the selling pressure. That's why I'm cautiously watching for follow through, but can't get overly maintaining a stronger bullish position until it gets above this 98.21 and can stay above and close above the 21 EMA on the weekly. However, that is not a very bearish candle, especially with cycles rolling over. Okay, we did have the percent B buy that's followed through. Now I'm going to be watching on any pullback. I'm going to be watching relative strength on any pullback. Good morning, Royal Palms. So that's what I'm looking at right now with the dollar. And I'm actually going to update these key levels to there. And we did have a pretty between the lows, divergence, and look at this, couldn't even get to oversold again. So we've been waning divergence. Now, is this a larger, why am I focusing on the dollar? Because the dollar could lead to a massive market shift overall. Things have been very bearish, and we're a long way off from triggering it. But this could lead to a massive shift in things. That's why I'm focused on it. That's why I'm focused on it. I just want to see how this lines up. And that could take us back into the middle of the overall rotation zone and back to the 200 week eventually. Are we anywhere close to triggering that? No. But I am keeping over the next few months the dollar index high on my radar. Good morning, Ted. Okay. Why am I also keeping an eye on that? Because the market has just been, we have no selling pressure in place. We have no major topping pattern in place. The market just keeps grinding higher. We've stopped the corporate buybacks for a time because they're in pause mode because of earnings coming up. We still have strong passive flows. Okay. But again, people, whenever I hear the no-brainer trade, it's just, the no-brainer trade is short the dollar, long equities. And yields are going to drop, longer-term yields. Well, I don't know if that's a no-brainer. Now, is there a topping pattern? Would I be shorting this market yet? No. We are insanely overbought. We're getting overextended from the weekly rotation zone again. We have OPEX today. I'm paying attention to the 6,700 area. But again, I'm not doing anything. This is one of my, the 4 least favorite trading days of the year. This is one of them. This is one of them. So I'm really in pause mode headed into next week. I'm watching the bottom of the 4-hour rotation zone also. We've been holding it recently, especially on a closing basis. So on a closing basis, it's 66.75 area. Other than that, if we break above 67, we're trading against a key resistance area right now, 67.05. But if we break above there, you see the selling pressure up here. It's 67.15 to 67.20. If we did miraculously break above that, it's 67.33 is the next key level. But 66.75 is one of the key things I'll be watching, at least in the short-term shift headed into next week. And look, even from the daily, we're getting very overextended from the daily rotation zone. So we'll cover that next week. And very overbought and daily cycles are back at the top. So if you're short-term, again, if you're short-term trading this, know where your short-term stops are. Long-term, we don't start doing major technical damage or even minor technical damage until we drop below about 62.50, 62.75. So could you see a pullback to there that just resets everything? Sure. But this is the longer-term technical areas I'm watching. Good morning, Rick. Did I say good morning, Ted? So, same thing, NASDAQ. Starting to get overextended. Very overbought again. Very overextended from the daily. 24,800 on a rally is the key level I'm looking at in the futures. Above there is 24,850. Could we get a little minor topping pattern form going into next week? Sure. We'll highlight that on Monday if you're going to tune back in, as long as you're not sick of me yet. Key thing on a pullback, probably for Monday, it's going to be about 24,600. Today, it's about 24,580. Again, I'm watching the daily rotation zone. Okay. There was a 4-hour %B buy back on Wednesday of this week, and it's just continued to follow through, and a rotation zone buy. You got the rotation zone buy here on this candle. You got the %B buy on the 4-hour this candle. So, again, would I not shorten? Not shorten. Unless there's something comes out of the blue with massive momentum. That's the only thing that would change my opinion. Like if something literally comes out of the blue, whatever that would be, and we start getting massive, you start getting the big bars, like Halloween coming up, you got to get those big bars out. If we start getting the big red bars, I'll be looking for short-term downside plays. Other than that, not interested. Dow, again, could be getting to a minor topping pattern heading into next week. 46,722, 46.9, but I'd be watching if it does break to new highs, 46.8 today. Not much to talk about there. Russell, closing above the next harmonic yesterday. Again, bigger picture with the Russell. The Russell has gone to new highs. So every one of the markets has now exceeded their prior highs. Russell's in rah-rah mode because rate cuts are going to save all the small caps and all the zombie companies. Okay, whatever. Other than that, there's not much. We don't even have another decent pausing bar. And when I don't get pausing bars, it's also telling you about something. The market's getting a little too overheated. But can it continue? Yeah. So, all right. Russell, 2,500 is key today. 2,500 is key. We do have a little minor potential double top. This is the cleanest one out there. Okay, it would take it back in the 4-hour rotation zone. Would that do technical damage? No, it doesn't even take it back to the daily rotation zone. But that's the only thing to keep an eye on. VIX, little reversal yesterday, but still, look where we're sitting in terms of VIX. It's still not too late to get some hedges on. Still not too late. And literally you hope they expire worthless. Yes, you give up some profit to the upside. But man, I'd rather give up some profit to the upside, and be hedged in this crazy market than exposed to the downside, because the upside will take care of itself. DAX, we had the contract roll, still against key resistance. Still, I'm watching above that 50, even with the contract roll. The yields. So stops raised on the double. We do have a little minor potential double top. It's lopsided. Would I be shorting the yields aggressively? No, I would not. I'd be watching, because the invalidation point for the remaining double targets is indeed a close below 4.047. The double doesn't even take it there. This double may not trigger. But we've hit the first target a couple times now. All right. So yields, definitely, those are the 10-year yields. Now, against the rotation zone, so would I be surprised to at least see a pause/pullback here? Not at all. But also, we're still in a major support zone on yields. Overall, yields have to get back above on a weekly basis. I'll be paying attention to this over the next few weeks, especially with PCE coming out next Friday. It's roughly around 4.3 is the key level that it's still got. So we're still a long way off. We can still hit the weekly rotation zone, the last major breakdown area, and still roll over again. And that will be key. That will be the next major secondary reaction down. But I'm paying attention to that. This is more of a bigger picture. Well, thank you still for being here, OD Green. Thank you for posting that, Sterling. 30-year also not as strong as the 10-year, but bouncing up. The 30-year overall still over the next little bit has to get above this 4.75 yield again. But we could be setting up next week for a potential percent B buy candle on the 30-year. Again, could we roll back down again and form a stronger bottoming pattern? Yes. But unless we go into a massive recession, yields could hold firm or continue to climb. Crude, breaking back down now below key support, so any longs are nope. Watching now, we're caught in just a expanded trading range in consolidation. So I'm now watching things to drop back down to the key support level with cycles at the top again. Natty gas, confirming but not triggering the potential double yet. We're going to have to watch how today closes. Gold, confirming on the 4-hour and triggering the double. Looks like it's going to be a channeling double. Would I be shorting this? No, but I'm going to be watching these key levels for pullbacks. But the gold is looking a little tired up here with cycles still getting back to the top and overbought and overextended. So we could go into, even with the pullback, into a consolidation phase on a bigger picture. What else do we have? We've already gone through the dollar. Euro. Going to be watching today where this closes in relation to 117.60. Again, coming back down to the bottom of the rotation zone. Going to be watching this, but so far it broke below a very key support level. Spiders. Again, I'm paying more attention to the futures today. On any rollover to yesterday's close, gap fill, and then to the open. So it's coming into major support area. On a run up, 665 is key. Very key. Again, we'll look at those more next week. The Qs, gap up again today. On any weakness, the gap fill, 595.32. Other than that, hit the next key harmonic level yesterday and backed off. But 598 is again going to be very key on the Qs. If it powers through something, we get some insane price action, 600 is going to be key. Bitcoin, still just slowly climbing, but not invalidating the double yet. I'm sort of watching for a floor still in oil, right around that 61 to 61.50 on a pullback. If it gets back there, I'm going to be more aggressively looking for bullish bounces. Oil just doesn't want to break down below that 61.50, 61 area. What else do we have? Tesla, which had the little minor 4-hour double, which is not triggered and is officially off the table. So just wanted to point that out too. What else? NVIDIA, it's just back in consolidation mode. Broadcom, the AI thing's real. I mean, it's getting forced to the upside. Like, let's force the AI to the upside. But is there a short pattern? No. It's just running out of momentum to the upside. There's your Intel. So you had the gap up yesterday, the reversal candle. I'm just going to slowly watch for this to backfill over the next few days / weeks. We already covered that yesterday. So would not recommend chasing that higher either. There is just FedEx, which had earnings yesterday. Beat. Revenue was a pretty decent beat. But we had a gap up after hours, and it's still a slight gap up, but not major. Not major. So, cautiously optimistic with their guidance, but not super strong guidance. Is there a great play here? No. I mean, a short-term play would be a break above 233 with a potential to retest the 200 area, but that's just scalpy in nature. Other than that, not a lot of great plays in FedEx. Mags, short term. It does have a little minor double top, yes. It does have a little minor double top. Here's the invalidation point. You should know the invalidation point because this may never above 64.84. It's invalidated. Trading pre-market 64.58. So yes, there is a minor potential double top. Is that like, oh my gosh, look how overextended the mags is from the weekly rotation zone. Cycles pinned to the top, very overbought. But the technical breakdown level, you see where the weekly rotation zone and the prior breakout level is, all the way back around 56, 65 to 57. You got it, even a pullback there. Then I'd be really watching for a massive topping pattern, but that would be, you'd still technically be in bull mode, just on the longer term basis. Because it doesn't do any major technical damage till it breaks below these key levels. But it is very, would I be aggressively going along the mags up here? No. Not with Coco's money. And where is Coco? Wasn't he super bearish? Am I just the opposite? Again, I'm not super bullish, but you got to ride the bullish trend until it ends, and you got to ride it with hedges. From my perspective. So that's all I have. Don't do stupid on triple witching. Please. This is not the day to overtrade. We got, let's just take a look again next week. Monday's quiet, besides some Fed speak. Tuesday's relatively quiet. Wednesday's quiet. But you get into Thursday and Friday next week, it gets very interesting. And as Sterling put in, things that have potential to change drastically this afternoon is 9.9 billion in GEX premium decays rapidly and open interest is reset by dealers. And overall, we could see a shift after this options expiration. This is my big window. This is the window I really focus on hedges now from OPEX from September to just only, it's only October's OPEX, but we have this major window where I really make sure my hedges are intact. And that starts literally end of day today. So with that, I shall talk to everyone next week. Have a wonderful, wonderful weekend. And, enjoy. We're getting into some fall weather. Well, for me, that means we're only in the 90s. But, enjoy your fall weather. Enjoy if you're in an area where the leaves change color. Enjoy that. And I'll talk to everyone next week. Bye for now.